It's a pleasure to have you on today, Mark. And I feel like the broader story around emerging markets has been really dictated by China and what Beijing has been doing on the regulatory front. Does that continue into 2022?
Yes, I think it will continue. And I think you pointed out very well the differentiation between the general emerging markets index and what's happening to individual markets like China, India, being so different from each other. So I think it's very important to remember that in the coming year, it will be differentiation, which will be the keynote issue. In other words, it's very, very important for investors to look carefully at each country and examine which ones are going to be locked down continuously and therefore have real problems, like China. And then you look at India doing very, very well and Taiwan doing very well. So it's going to be a very, very interesting situation. And it's very important not to buy the index, not to buy the emerging markets index, but to look at individual countries. And if you contrast the behavior of COVID treatment and the way COVID has been handled by countries and places like Hong Kong and Singapore, contrasting to here in Dubai, where the Dubai government has done such a terrific job in opening up the market, keeping it open, people being able to travel and so forth. So I think these are the kinds of things we're going to have to look at very carefully.
So what I'm hearing from you is investors should become more selective. Don't just go broad and try to throw money at the emerging market ETF. Before we get to some of your top picks like India, because China is just so large, Mark, and the ties it has to the rest of Asia, in a way, I mean, this could become a big risk going forward. It seems if you think that Beijing will continue with this regulatory crackdown and that in itself will have a negative effect on its economy going forward.
Well, I think in the long run, it's probably going to have a positive effect because good regulations, not allowing companies to get overboard in various investments and cracking down on very extended credit to these property companies, for example, is a good thing. But in the short run, probably throughout this coming year, they're going to be in trouble and the market won't do so well. But you must remember, again, you've got to differentiate because there's some small and mid-sized companies in China who are actually going to benefit from the crackdown, because as Alibaba and Tencent lose business, this will be taken over by the medium and small companies. So again, differentiation is really the keynote.
India, you mentioned one of your top picks. It's done incredibly well this year, but what do you think are the big risks going forward?
The only risk for India would be a diminution of the reform movement. In other words, Modi's government has done a terrific job in embracing reform. If they let up on that and decide not to extend the reforms the way they've been doing, then India could be in trouble. But otherwise, things are going very well for India.
Broadly speaking, we tend to look at the Federal Reserve and the recent moves taken, this idea that rates will be moving higher, 3 interest rate hikes here in the U.S. next year. That would typically be bad news, Mark, for emerging markets that sit on high levels of dollar-denominated debt. But what's your take?
Again, yes, there's no question. Those emerging markets that are heavily indebted in U.S. dollars are going to be in trouble. Again, companies that don't have debt, particularly don't have U.S. dollar debt, are going to do very, very well because they'll be the winners in this situation as interest rates go up. But it's interesting to note that the U.S. economy is doing very, very well. And I think you have to chalk that up to the way the American economy is open. In other words, they have not been so severe as countries in Asia in cracking down on COVID situations where they lock people up for 2 weeks at a time and so forth. So it's very interesting to see how America is doing so well compared to these other countries. And I think it's because of the way the COVID situation has been treated.
Mark, sometimes when I speak to foreign investors, they say they want to invest overseas, but there are limited opportunities. Going into 2022, do you think we'll see more IPOs, more new companies come to market, not just here, not just in their respective exchanges, but also here in the U.S.?
Actually, there are so many good companies listed in emerging markets and, of course, the U.S. market that you don't need any more IPOs. In fact, you probably want to stay away from some of these IPOs. Companies that are not making money and that are really driven by hope and tremendous promise. So I think the opportunities are still there, tremendous companies. And by the way, many of these emerging market areas are dominated by US companies in certain sectors. For example, in electronics, you see Apple and all these other American companies doing very, very well and making big profits from emerging markets. So in some ways, you can consider them like emerging market companies.
An incredible rebound in oil and energy this year, Mark. No one really anticipated it. Does that help certain economies more than others next year?
Actually, it hurts a number of these economies that depend on imported oil, imported coal. By the way, coal is still being used extensively. So you have to, again, look at this carefully to see what areas are being hurt and what areas are not being hurt. So generally speaking, a higher fuel price is not good. Also not good for America, but I don't think it's going to be the end all and be all of the investor sentiment. I think the investor sentiment will be good in those areas that are doing well in other areas, particularly technology.